Anthony, great to have you with us.
Nice to see you again.
Can you start by giving us a portfolio overview and your Q1 highlights?
So since our last update, we've been very busy and we've managed to achieve some pretty significant milestones for both Liberation Labs and Onigo. Liberation Labs, we put a further $10 million into alongside City Capital. This keeps the project in Indiana on track for a Q1 2025 launch. And that's very exciting because that factory is going to be cash flow positive essentially from the day that it is commissioned. Onigo managed to achieve something that no other precision fermentation company has been able to achieve in the last 24 months, and that's raise an additional $40 million, which is a really substantial amount of money in this current funding environment. There was significant participation from strategics as well as financial investors, and that's been a really nice uplift for Agronomics there. In addition to those two relatively substantial milestones, Clean Food Group, Agronomics palm oil company, received an additional £2.4 million of funding from the Clean Growth Fund, which is a UK-focused climate investor. And then Solar Foods raised a further €8 million from existing and new investors.
So let's talk a bit about funding in the sector and the type of investors that you're seeing.
Well, we already saw InvestNL participate in Meatable's funding round. That's a Dutch government fund. And then we saw Neom participate in Blue Nalu's, actually lead Blue Nalu's financing in October of last year. We're continuing to see a lot of interest from that caliber of investors. But in addition to the direct investment, we're beginning to see some really interesting government initiatives around soft loans and grant funding, such as the Biden administration's biomanufacturing initiative. And Liberation Labs received $25 million under one of those loan guarantee programs. There was a program launched in Germany, similar in nature, and also in the Netherlands as well.
Anthony, can you give us an update on your financials? How's your balance sheet looking?
Agronomics' balance sheet remains very strong. We finished last calendar year with more than £20 million on the balance sheet. And following investments in Onigo and Liberation Labs, we've taken that cash balance down to around £12 million. It was always the intention to invest Agronomics cash down to around £10 million. And given the operating costs of Agronomics are around £1 million per year, that would give us a 10-year runway in order to see the portfolio play out, which is more than sufficient given the companies that we've invested in. Now, in terms of future fundraising plans, given the substantial discount to NAV, which is being reflected across the entire investment company and trust sector of Agronomics peers, we have no intention of raising capital because we don't want investors to suffer the substantial dilution that would occur. Should things change, then we would be potentially interested in going back to the market and expanding our portfolio further.
Now, there's been some negative press recently around the sector, particularly in the US. Do you have any comments on that?
More recently, there have been some pretty negative headlines around the sector and claiming that there's been a huge amount of over-promising and under-delivering from the sector. A lot of that negative attention, if not all of it, has been really focused on two key companies. One is Good Meat, which in the industry is an open secret that it was not performing very well, and the other is Upside Foods, which we have a pretty high opinion of. Now, in addition to those negative headlines, there's been some proposed bans of cultivated meat in Florida and some other Republican states. Although this reduces the market size, the reality is that even if half the states in the US, representing about 150 million people, were to ban cultivated meat, this would still leave a very, very substantial market for this industry to go after. And given where this industry is at the moment, we're a long way away from producing meat for 1 million people, let alone 150 million people. So there's a huge amount of room to grow. I think that the negative headlines really mask the underlying progress that is being made by the sector in terms of technology progress and cost reduction. And we continue to look forward to additional approvals in the US, even if they're only in the democratic states and on the east and west coast.
So let's talk about the positive developments that you're seeing in the sector.
So we've seen some regulatory approvals come through for both cultivated meat and precision fermentation companies in the recent months. Aleph Farms got approval for its beef product in Israel. That's the first beef product that's been approved. Val Foods from Australia got its quail product approved in Singapore. That is the first of a kind for its species as well. Then on the precision fermentation side, we've seen a number of dairy precision fermentation companies, including Imagine Dairy and Vivici, get their products approved in the US. And then Turtle Tree, which is focused on a high-value protein called lactoferrin, also received regulatory approval in the US. So there's a lot of positive momentum on the regulatory front for sector-wide, but 2024 also is the year for regulatory approvals for Agronomics portfolio. We're expecting Onigo to receive regulatory approval in the US for its egg protein, Clean Food Group for its palm oil product in the UK, and then Formo managed to launch last year, and then there are Blue Nalu and Meatable for its bluefin tuna and pork proteins, respectively, in the US and Singapore. So really exciting time for Agronomics portfolio. The seeds that were planted back in 2019 and 2020 are starting to sprout, and we look forward to these companies generating revenues and ultimately becoming cash flow positive.